All right, let's get it. I don't know if I should play music in the back. For now, I think I'm not. If you guys want me to, just let me know. Um, but if I'm gonna be making clips out of this, I think it's best for me to have no music for now. But we should be live. We should be going. Let me make sure everything's up and running. But yeah, this is a new start funding challenge part two. Guys, if you remember, I made a whole video last year around this time on my first attempt, and I told you guys I'd be doing it again next quarter or next year round. So it is currently October 16th. I'm starting about a week earlier than last attempt. And yeah, I was real patient to come back, guys. The only bad thing is, I put everything on pause. I was getting everything together for this. So that's the little drawback when it comes to inconsistency. People think that you quit or something. Guys, I've been back testing almost every weekend. I've been looking at the market every Saturday or every Friday before it closed at 5. But yeah, I'm gonna start making content again on this page, so be on the lookout. But this will be a very low-key series because I don't really want to go on Instagram and post about what I'm doing until it's actually completed, if that makes sense. But I hope you guys are having a good morning if you're watching this post stream, as we only have 2 people in here. And yeah, let's get hold on. Is that recording? Okay, cool. But yeah, let's go ahead and get started. So again, my main focus is gold, and then I have all these other currency pairs on the side, and this is the same as my funding challenge, and I actually have to set that up now that I'm thinking about it. These are the only pairs I'm going to be trading, okay? Let me go ahead and get this situated. And a lot of people didn't know that, but you can, in fact, trade gold while you're doing these funding challenges. So I'm just adding all these pairs on my MetaTrader real quick so I have everything up and rolling. And then we start talking about prices. But we have gold, we have AUD JPY, so let's go ahead and get that. We have CAD JPY. Euro AUD. Definitely need to add that. Put that under CAD JPY. GBP USD. Do we have that? Yes. Euro CHF. I'm not too sure on. Um, I don't really trade those pairs, but we'll still add it on the watch list just to have it, just in case. You never know. When it comes to these funding challenges, it's not about having. It's honestly about maxing out your opportunities. So I see it like this: the more pairs, the more opportunities. Honestly, so we'll just add it for now. But I don't really trade CHF, which is Switzerland. So we have USD, Euro CAD. Do we have Euro CAD? No, we don't. So AUD, CAD, Euro AUD, Euro CAD. That is not on the watch list. Okay. And that is the Euro versus Canadian. Euro GBP, we have that. Euro JPY, we also have that. Cool. Euro USD, which is one of my favorites. Yep, we have that. GBP AUD, we don't have that. Okay. So AUD comes first. And then we have JPY. Do we have that? Yep. NZD, New Zealand. Um, do we have that? No. And again, I don't really trade NZD pairs, but when it comes to these funding challenge, the more you have, the more opportunities. So we're just gonna add it for now, just in case. You never know. And we'll put this bad boy under JPY. We're just going in alphabetical order. J, N, and then we have USD. USD CAD is next. USD JPY, have that. And then Bitcoin. Okay. So we'll delete this. Do we have AUD USD? We don't. We can add it. Sure. It won't hurt to add that under gold, but then that should be it, right? Do we have GBP CAD? Do we want to trade? No. I don't like that pair. And we should be good. So let's go ahead and add AUD USD. That's something I don't have on my watch list. So we'll go to add, and this is AUD USD. And we'll put this right here. All right, we should be good to go. We should be good to go. Let me make sure. AUD USD. And we'll put this right here. All right, we should be good to go. We should be good to go. Cool. So when it comes to trading, guys, most people will take a lot of breaks and then come back, which is perfectly fine. You know, that's what I did. And when people take breaks, it doesn't necessarily mean they quit trading. I think the whole objective of trading is to get to a point where you don't have to be on your chart 24/7. I think the whole point of trading is to have freedom. So these big players in the game, I don't think they actually sit at their desk 24/7. I think they get to a point where they can only place one trade for a week or a month and be done. instead of having to wake up and consistently build yourself up. At the beginning, yes, you have to do that to build your account up, or take funding challenges, go towards a prop firm funding objective. But at the beginning, when you're trying to fund your own account, you have to be consistent. You have to be disciplined. You have to wake up every morning or night, depending on what session you trade. But trading in general is about having freedom. I think that's why a lot of people trade in the first place, because they're trying to escape something they don't enjoy. So with me taking my break, a lot of people thought I was just AFK, like gone, I quit. And I understand from a social media perspective, you have to continue to promote your brand. But objectively, I was getting stuff situated for this, right? My comeback, I guess. Because when it comes to this industry, a lot of people like to fake it till they make it. So I could have just been consistent on some low key type vibe and not really be transparent. But instead, I decided to just go off camera and get my life in check so that I can come back 100%. But yeah, we're gonna live stream this Monday through Thursday, guys. So it is currently 6:43. I kind of started late. I think I'm gonna start at 6 o'clock every morning. But we're gonna be doing this live. So my only regret, with that being said, my only regret of being away is missing opportunities. So literally, guys, last week we had this big push in the market on gold. I think there was a huge announcement on a Forex Factory. I think I might have missed the announcement. I'm not 100% what it was called. If you guys want to remind me, you can. But basically, when it comes to the market, you see gaps like this when price makes a all-time low or a current low, right? Here being at 1813, you guys can catch some really good pivotal points to catch entries. So because we had this low, as you guys can see right here, gold didn't make a low for some time. It was pushing up. We had a lot of momentum, and it finally pushed down, right? When you see something like this, and you can identify some sort of gap, you can catch a really good move. So I missed this move about last week. This is before the market closed too. I'm on the daily time frame. So let's say if I caught this move before returning, right, I would have capitalized over 1,000 pips, and moves like this is what sets people up for a week or a month when you think about like a swing trade or a big trade for a certain account size. So that's what I mean when you trade, it's not about being consistent and finding small moves. It's about finding those big moves and being satisfied with your profit. So a lot of people, they come in here and personally, I'm not a scalper, so I have a different mindset when it comes to intraday trading. But a lot of scalpers, they look for micro moves and they form an addiction to be on their charts 24/7. Me personally, I like trading sessions. So New York session being from 6 to 12, but I'm up from 6 to 8, or London 1 a.m. to 4 a.m., but I'm up at like 2 a.m. I want to try to find a move in that session, be in, and then be out once it hits TP. But yeah, I really do wish I caught this move, guys. I'm not gonna lie to you. This was literally a day ago, or if I'm on a daily time frame, we can look at the candlesticks. 1, 2, 3, 4, 5, 6, 7. It's about a week ago, so not too crazy about it. Not too crazy about it. Let's go ahead and talk about some setups. So I'm gonna be doing this live in front of you guys. I didn't pre-prep or anything. I think all my charts should be clean as well. Let's just check. All right, let's just remove all drawings and do this from scratch. Oh, what's this? Move. That's another thing too. When I'm doing this, guys, I'm not on Instagram at the time. The only time I'll be on Instagram is when I'm making content. So I'm gonna be making clips, me explaining concepts, me showing live profits, TPs, all that stuff. I'll make content, but I'm not gonna be on Instagram promoting all this stuff because truthfully, guys, my community is dead. Like, as you guys can see, there's no one watching this right now. I'm pretty sure you guys are gonna watch this post stream instead of live for majority of my live sessions, but that's perfectly fine. My Discord is dead, so I'm not sure if I have to make another Discord or just market myself better. As you guys can tell, I'm very low key. I haven't really been marketing myself. I've just been posting content, but I'm gonna start utilizing TikTok. I'm gonna start making better content on Instagram and actually direct people to my live streams so people know that I'm actually doing this live. I think there's this whole misconception when you trade in general, you got to be careful because a lot of people aren't legit. I'm gonna be honest with you guys. A lot of people are not legit and they don't do stuff live. They just make content, and I kind of want to separate myself from being that person that just makes content because I have that skill set. I have the ability to make good content and make good, persuasive content. But I rather do stuff like this where it's live and it's more raw, I guess. So that's just something I'm gonna start doing. I'm letting you guys know. I'm not gonna be on Instagram. Only time I'm gonna be on Instagram is for content. Not gonna really gonna direct people to like courses or services. I have my thing up that's below me, my bot. If you guys do want to, but I'm not going to be like promoting it while I'm doing my funding challenge. Main objective is to get funded. That's the main objective, not to promote other stuff. So Instagram, Discord, I'm gonna be AFK for now. But I was saying, let's go ahead and review these pairs. Remove, and remove. And I don't know why Bitcoin is on my watch list. I think I just like looking at Bitcoin just to see what's going on because there was a lot of hype a year ago about this. So as you guys can see, Bitcoin, it does follow the same rules of price action. So I just like to have a good eye on it just in case. You never know. But I'm not going to be using Bitcoin in this funding challenge. I don't think you can trade crypto when you do any type of prop firm challenge. But we're just going to keep these drawings up. I'll just mark it pink or something. All right, so let's talk about it. So first things first, we're going to go on Forex Factory and see if we have any announcements. So Monday, October 16th, it is currently 6:49. So we're going to look at what's happening after. We have 8:30 a.m. CAD, and USD, manufacturing sales, wholesales, sales, Empire State Manufacturing Index. So since these are yellow folders, we're not going to focus on them. We primarily want to focus on the red folders because it screams volatility. When you have yellow folders, you don't really get movement in the market. Red folders, you can find some sort of impulse action. So we're going to look at USD at 8:30, Empire State Manufacturing Index. And if you guys want to read up on this, you can. Personally, I like to just because it gives me an idea what the event is about. And it just makes me feel more smart, I guess. I don't know. But why traders care? It's a leading indicator of economic health. Businesses react quickly to market conditions, and changes in their sentiment can be an early signal of future economic activity, such as spending, hiring, and investing. Okay, cool. It's also called New York Factory Index. So 8:30, I'm going to keep an eye on this announcement. I should not be live, but if I see anything, of course, I'll just send it in the Discord, right? And then my other website that I use is FXU. And give me 1 second, guys. I'll be right back. Give me 1 second. All right, where was I? Sorry about that. I had to use the restroom. Not gonna lie to you guys. But as I was saying, uh, what were we talking about? The second website that I use, FX Street. Now this website kind of just gives me a summary of what's important. I primarily use it for gold if I see anything that's happening in the market to have a grasp on my fundamental analysis. When we talk about fundamental analysis, we're talking about news, how news relates to the market, why news is important to understand, and why news primarily affects price action, right? So usually what you can do is just go into recommended and see a good summary of what's really trending. So right here, Forex today, geopolitics keep markets on edge to the start of the week. Euro USD forecast, Euro stays below cluster of resistance. So usually I look at this first to see if there's any pairs that I trade that's kind of relevant to my fundamental analysis. On the side, on the left side, it kind of gives you a summary of what's happening as well. That's moving the market. So GU eases to near 1.2150 after BOE's pill, and it gives you information. GU is parking, or I'm sorry, GU is pairing back gains to near 12,150 in the European sessions on Monday. The pair is weighed down by the latest dovish comments. So it just gives you a lot of information that you guys can read up on. And again, you don't necessarily need to understand everything, right? You don't need to understand what they're talking about. You just have to find these small hints that they're indicating to either push the market up or push the market down. Because you have to remember, we are a small percentage. A lot of people are looking at these news. A lot of people are also trading at 656. So when we see little hints in the market that indicate if people are going to buy or buyers are going to buy or sellers are going to sell, we want to try to catch those moves with those players. So that's the main objective when it comes to fundamental analysis. It's not to be the smartest. Let me slow down. It's not to be the smartest guy in the room. It's just to understand what these smart guys are also looking at. All right. So right here as well, we have information on gold. Gold price remains depressed below multi-week top. Gold price railed to over a 3-week high around the 19/1933 area on Friday in wake of intensifying Israel-Hamas conflict, which forced investors to take refuge in traditional safe haven assets. See, I have a hard time reading those sometimes, not gonna lie to you, but I don't have to understand everything. I just have to get a grasp of what's happening in the market. So usually I'll read this, like the first sentence, gold railed to over a 3-week high around the 1933 area on Friday. Cool, that's it. That's all I need to know. And I just double check to see if that's accurate. All right, cool. So where's gold right now? Around 1933. Cool. And like I explained earlier, before we had this push, guys, if you would have caught this move right here, you would have been good for the week. When price makes an all-time low, or it comes back to an all-time low. Again, I'm on the daily time frame. So this was March of this year, guys. So what is that? You're from March, April, May, June, July, August, September, October. That is an 8-month low, right? So when you have that gap in the market, when it comes to gaps, you want to try to find a monthly low. So in this scenario, gold didn't make that low until March, right? So when it comes back, you want to try to find those good setups for a push. So again, when it comes to price action, this is simple. We have support and resistance. What you could do is just draw a line and wait for price or that price is going to eventually come back. And if it does come back, be ready to enter in for a trade, for a buy in this scenario or for a sell in another scenario. So this happened last week. And the bigger the gap, the bigger the move, right? So the last website that I use, I believe it was investing.com. This is also just to get an idea of what's happening, what these big players are also looking at in the market. I don't use this method too much. I was using it last year, and I also put it in one of my course videos explaining how I actually read this. And for the most part, it did work. I was using this for NFP. I was primarily using this website for NFP, but then I kind of stopped trading NFP, not gonna lie to you guys. And I started to stick to my plan, which is Monday through Thursday. Stay away from Fridays, especially NFP. It gets hectic. Unless I really feel confident, then I will do a trade on NFP. but for the most part, it's not really worth it. I do have some videos on a playlist. I think it's called um, Live Trades or something, where I was using this method for every first Friday of every month, but then I stopped doing it completely because I started implementing a different system. But yeah, I'm only going to be trading Monday through Thursday. But this website is also good if you want to read up on news, what's happening, look at interest rates, and also look at sentiments, which basically gives you an overview of what people are looking at in the market. And this is primarily what I was using. I was getting an idea of what is going to happen in the future, like future predictions, but it's not 100% accurate. My whole thing is I'd rather go off of a technical analysis now more than a fundamental analysis. Technical analysis is more of the what's happening, what you need to do to be prepared, and the fundamental analysis is more of the why it's happening, right? So you see a move in the market, you know what's going on. You have uh, uh, break and retest, right? You have supply and demand. You know what's going on with price action, but your fundamental analysis is more of the why. All right, why did this happen? Oh, president spoke out, or non-farm room payroll, right? It's like the why. But I think when it comes to trading, I'm gonna say price action is a little bit more important because it's actually the market. It's real data. So I kind of leaned off of the whole fundamental aspect. Not saying it's not important anymore, but I just think you don't need it as much as your technical analysis when it comes to understanding this skill set. But yeah, this is also a good website, guys. I'm not gonna say it's bad, but when it comes to the top three or the most important ones that you need, I would say Forex Factory to get an idea if there's any news going, any important news, any spikes, stuff like that. And then you have FX Street because it gives you more information on the why aspect. So yeah, guys. Let's see if we see any setups. It is currently 7 o'clock. Every 30-minute interview, I'm gonna see if I can find a setup. If I happen to any, I will post them live. If you guys want to hop in them as well, you can. I will be documenting everything. I already have a new spreadsheet as well. So if you guys have any questions, just let me know. But on gold, let's go on the 4 hour. We'll start 4 hour and just work our way down, doing top-down analysis or vice versa. Well, that is top-down analysis. I'm sorry. Top-down analysis, I'm starting on my higher time frames. I'm working my way down. So never mind. So 4 hour, let's go ahead and zoom in just a little bit. So as you guys can see, gold is now pushing up, right? So when we talk about structure, only thing that I can look at right now is from this push. We're looking for some sort of resistance, right? Gold is doing its thing. It's pushing up. It's trying to form new structure. So if we zoom in, notice how we have this spike right here. Whenever you guys have a spike in the market, when we talk about trends, price is never just going to go all the way up. There has to be some sort of retracement. So usually when you have a spike, this is where a lot of people like to draw their fibs. They see Fibonacci setups. They want to try to draw it from the bottom to the top, which is fine. But Fibonacci is simply also like a break and retest at certain areas of structure. In this scenario, if price is starting to retrace right here, we have this bearish wick and we have a bullish opening. If we look back, we can see if we had any structure to support this candle, right? And looking back, I don't really see anything. And if you don't see anything, then I would honestly just wait until you can see something. Because the thing is, this candle is also still forming. So it could flip bearish, right? We're on the 4-hour time frame. This is a 4-hour candle. This could flip bearish. You don't know. But what I'm looking at is the previous candle. We closed with a wick, a bearish wick, which means there is some sort of bullish momentum. But like I said, we're still in formation. So this candle could flip bearish. We're on the 4-hour and it's only been 1 hour 55 minutes. Let's go to the 2-hour. So 2-hour, you can see more clearly what these candles are forming. As you guys can see, this is also a I think this was called a morning star. What's it called when it's either an evening star or a morning star. And that's another thing about vocabulary. As you guys can see, I'm rusty. But when it comes to vocabulary, as long as you understand what you can see, you don't have to you don't have to get all the wording correctly. Like I could make up a whole name for this pattern, for this candle formation and still make it make sense. But I'm pretty sure the universal terminology for this was like uh, uh, morning star because the sun's coming up, and the evening star is when it's going down. But when you see three candlesticks next to each other, you see a bearish candle, a middle bullish candle, and then one that engulfs that previous bullish one. It means you're gonna have a good probability for a bullish continuation, right? But let's go ahead and go to the 1 hour, see if we can see anything. Again, these candles are simply just spreading out. We do see a little structure right here. As you guys can see, we have this bearish candle before we have this continuation. So if we go on the 30-minute, I guarantee we could mark up some sort of zone that a lot of buyers were placing on that interval to see if they could have a break and retest or a pullback entry. So 1 hour time frame, as you guys can see, it's more structured where we have this wick. I'm just placing that zone candle to candle, wick to wick, where price does come back into that box and then it starts to push up. But ideally, guys, especially if you're doing funding challenges, I don't primarily scalp. Me personally, I don't think scalping is legit. I might just be a hater as well. Scalping to me looks like gambling, especially on 5-minute time frames, because you're in and you're out. You're in, you're out. You're in, you're out. Again, I like to trade in sessions, quarterly sessions, where I can hop in a trade and let that trade last throughout that session. Or if it doesn't, I come back to it instead of just going in and out, in and out, in and out. 10 pips, 5-pip moves. Unless you have a big account, scalping is okay because you have a big account size. But if you're just starting, let's say you have $100 and you're scalping, you're in and out, in and out, in and out, in and out. To me, that low key looks like gambling because when it comes to scalping, you're going in fast and you're not really taking in what's the word? You're not really taking in the whole graphs of what's happening in the market. You're kind of just seeing something fast and you're hopping into it. Rather than swing trading, I feel like it's more advanced because you're actually getting a grasp of what's happening. You're staying updated. You're staying updated to the move. You're looking at your fundamental analysis. You're looking at your technical analysis, and you're combining it through a longer trading session. I don't know. It's just my opinion, though. But as you guys can see, gold is simply retracing right now, or it had retraced to this pivotal point. So if you did hop into this would have been about 80 pips, which isn't too bad. But 30-minute time frame, as you guys can clearly see, it did react off of that pullback entry. And here's another thing too. You guys will miss moves like this, right? But you will see it over and over again. So although I'm explaining this pullback entry and I technically didn't hop in because I missed it, this was 1 hour, 2 hours, about 4 hours ago. That is perfectly fine because I'm gonna see it over and over again. And this is day one, so we're all good. We are all good. And that's another thing, guys. I might just have to do London sessions. I might have to make another thumbnail and start doing London sessions while I'm doing this as well, which I'm not too crazy about. I'll just have to sacrifice my my sleep schedule, or rest in peace to my sleep schedule. Honestly, it's gonna be real hectic. And I don't really go lower because 15-minute time frames, that's when it starts to get real choppy, and that's when you start going to the whole scalping category. 5-minute, 1 minute, like the 1 minute time frame gives me flashbacks to like HFX. Remember when they were doing HFX, what was it? High frequency trading, where you're on the 1 minute time frame, you're trying to catch the moves live, and it just turns into gambling. Honestly, I'm gonna be real with you guys. Trading on the 1 minute just turns into gambling. So that's why I try to stay anything above a 15-minute time frame. But anyways, we're gonna mark gold and come back to it if we see anything at 7:30. But for now, we obviously see that has a pullback, and it did respect that zone, and it's starting to push back up. Now, do we call this supply and demand? That's the big question, right? So to my knowledge, or from my knowledge, supply and demand are basically order blocks that people are putting positions in for high probability setups. The difference between support and resistance, their lines, your supply and demand are primarily zones that a lot of people are anticipating for price to pull back into. So is this an order block? Does this count as supply and demand, right? So usually when I mark my zones, I'm just looking for gaps, or I'm looking for retracements, and how I simply mark them up is how you would mark up your supply and demand zones. But do we call this demand? And also, You guys have to remember supply and demand, right? Support and resistance. Support is your floor, resistance is your ceiling. And how I remember supply and demand is very simple. Supply, it starts with an S. I automatically think it's support. It's the opposite. So support is not I'm sorry. Supply is not your support. Supply is your resistance. It's when price is below your zone. Demand is when price is above your zone. All right, that's how I remember it. So in this scenario, since price is above the zone, this is demand. So, and an easy way to think about it as well when it comes to terminology, supply and demand. So supply, there's a supply of orders being placed. Demand, there's the demand of orders being placed. And in this scenario, I could mark this up because we have a dip right here and then it pushes up. And then we have some sort of gap in the market. And then we're simply just waiting for price to come back in that zone, right? As I continue to press play. Price is doing its thing. Price is doing its thing. Let's speed it up. Let's speed it up. And boom, we're in that zone. And when it comes to supply and demand, a good method that I've been using is you want to try to enter in on that 50 or 100% level. What do I mean by that? Very simple. When price first hits that zone, you don't want to enter in. If you do, you have to max out your stop loss to be below or above that zone in case you have any wicks or fake outs, right? So in this example, when it comes to my 50%, I'm simply waiting for price to hit that half mark of that zone. So I'll have my marker right here, and I'll try to just predict the half point of the zone, which is around here, and boom. So now that I have my half point marked up, I'm waiting for price to hit that level so that when it does, my stop loss can be decreased or it can be less wide. I don't know the better terminology for it, but the reason why you want to try to get price to get lower to that LPI or HPI, if this was supply, LPI meaning lowest point of interest, is because you want your stop loss to be, what's the word for it? You don't want your stop loss to be too big because the bigger the stop loss, the more risk, right? So in this scenario, if price hit this half point, I would have entered in right here. My stop loss would have been slightly below this zone, about 5 pips out. So if we're right here, this is 33. We'll just go 5 more. 1, 2, 3, 4, 5. Or we'll just make it 40, honestly. So it'd be 40 pips, right? Or we can even go 45. And then I've have this out to a 1 to 2, simply looking at that middle number. So we have a 45 pip risk and a 90 pip reward. And then I would continue. And boom, TP smacked, just like that. So that's my method that I use when it comes to supply and demand. I wait for that 50% mark so that my stop loss can be nice and tight. And then I coordinate my ratio with a 1 to 2 or higher, depending on where I'm at in the market. And I simply just wait for my trade to play out. It's that simple, guys. So in this particular setup that I missed, this happened in London. So I think this happened at around 1 a.m., which is what I might have to start doing, which is fine. But this is a setup you'll see over and over again, right? You were able to identify where the market was. You were able to identify some sort of demand that you want a price to be attracted to. You marked up your zone. You were able to identify that 50% level. You had your alert placed. Once it hit that 50%, you hopped in and you waited for price at TP and you're out. Just like that, guys. So in this move, you would have made 90 pips. And to put it in perspective, 90 pips on a micro is 9. 90 pips on a mini or standard. Wait, no. Yeah. 90 pips on a mini would be 90, and on a standard would be 900, right? So let's just put it to perspective for you guys. But yeah, we missed this move. I'll mark it in case we see anything else. AUD, let's go ahead and talk about it. AUD looks a little funky, not gonna lie to you guys, but as you guys see, we have a clear gap right here that price reacted off of. And now price is doing its thing. So another method that I use, and we can clearly see it right here as well, price is attracted to volatility. What do I mean by that? When we talk about price action, especially, most action occurs when it's trying to fill a void in the market. When we talk about liquidity, what is liquidity? Liquidity simply just equals value in the market. It's value that a lot of traders are attracted to capitalize on a lot of pips. So liquidity can also be referred as money, honestly. A lot of people like to say liquidity because it sounds fancy. Honestly, when I sound hold on. Okay, sorry about that. But when I say the word liquidity, I feel like Einstein. Not gonna lie to you guys. Liquidity just has a touch to it instead of just saying money. But yeah, don't let traders fool you when they say liquidity. They're trying to sound smart. I try to sound smart, but you can just say money. Honestly, it's just money. It's invisible money that people are trying to grab. But when we talk about liquidity, candles also hold liquidity. And when we talk about a lot of pushes in the market, the bulk of the candle or bulk candles hold a lot of value. So when we talk about um, gap fills or my method, traffic fills, I simply mark up areas where there's a lot of traffic. So because we have all these bearish candles back to back, this holds a lot of momentum, right? And it's generating a lot of liquidity. And when it comes to market gaps, the reason why we have market gaps in general is because price is getting filled. All that liquidity is getting filled. Okay? So 9 times out of 10, what you guys will see when price has a lot of volume in the market, you see a lot of traffic, it's going to be filled eventually. So price is doing its thing. It's kind of forming some sort of market. I think it's trying to form a range. It's going in and out, right? We have a touch right here. We have a touch right here. It hits this nice support level and then it comes back to resistance. So it's respecting this zone, which is good because when you also have a range post traffic, it's also generating more liquidity that is going on. Sorry, let me slow down. This is good because when you have a range, it's also generating more liquidity that is eventually going to be grabbed. So the more liquidity, the bigger the move, right? So think of it like this. Because we have a touch right here, most traders are hopping in for a sell, right? They're hopping in right here because they're able to identify a double top, right? Well, if we have a touch right here and a touch right here, why not hop in for a sell? So a lot of people are hopping in right here and they're trying to catch this move back down to support. If it's going to form a range, you're going to see something like this, right? In and out, in and out, in and out, in and out, in and out. And again, this is good because it's building a lot of liquidity. So imagine, I'm not the only person trading this morning. A lot of people are hopping in for sells. They're trying to catch this entry right here. They're going for, what, 40 pips back down to this support, which is fine. But the beauty of it is that your stop loss holds all that liquidity. So the reason why it's better to wait and wait for that push is because you're going to get the better half of what these people are placing right now. So your stop loss right here, right? A lot of people are hopping in, a lot of people are hopping in. People are swing trading. They're using a 1-to-1, they're using a 1-to-2, a 1-to-3, which is fine because all this red stuff right here, from your stop loss to your entry, is generating what? Liquidity. And we'll just put a money sign right here. So now that you have the information, okay, cool. We have a lot of liquidity being built up. Guys, the market is built off of winners and losers. People are grabbing orders from other people. That's literally the basis of trading. You're literally winning and you're losing. But when you win, what people don't really understand is that you're grabbing those orders. You're taking out those people that are losing, right? So because we have all those stop loss placed from this general setup, people are hopping in because you have a double top and they're predicting a range. Okay, cool. We're going to hop in for a sell. Eventually, when this has a breakout and it takes all this as well, it's going to take all these orders too. And when you have such liquidity built up, you're going to see a big move in the market, guaranteed. So what I like to do, instead of trying to hop in and be a follower, I'm going to be a leader. I'm going to wait, have my alert placed so that when price does make its way back up here, I'll have my alert, yo, check AUD USD. Potential buy, right? And I'm looking at my news, look at all these other sources to confirm that price might eventually have a spike. And Forex Factory also helped me with that as well. So if I have any news coming out, if it's a folder, that's also a plus. But ideally, guys, you can either buy or sell in the market. It's not about being correct 24/7. It's about going towards the most probable setup. probable setup. I can't say that word, but high probability setups, right? So because I have this information, I know eventually we're going to have a spike in the market if price does decide to push up again. Okay. The only thing you have to be careful of is a fake out. So usually fake outs being, let's say if this did want to range, then it's going to grab some orders that are placed above this and then push down. So you kind of want to just be careful with that. But this being traffic to the side is a confirmation or an indicator that price is eventually going to have a filling, right? So that's just one thing I always look at when it comes to these methods that I use. All right, so we're gonna mark that as well. Do I think we're gonna get that move in this live stream? And it's currently 7:20. We have about 40 minutes. I don't think so because we're on the 2-hour time frame. If we scale on the 1 hour, you guys can see more clearly that price is still doing its thing. It's starting to push up, so maybe I'll just have an alert. Yeah, we'll place an alert just so I know. I think they switched trading view, but let's go 6 3 3 2 1, and we'll just say check price. Right, nothing too crazy. We'll just say check price. Where's my alert? Okay, cool. I didn't know if it was there. So we have check price. We'll just mark it green, I guess. And on gold, like I explained earlier, did miss the move. Really nice setup. And that's another thing. It's okay to miss moves, but if you understand what happened, you're always going to be able to find this again. So stuff like this happens 24/7. Guaranteed. You'll see setups like this over and over again. So if you understand what happened, you understand how to capitalize on a missed opportunity, you're going to see the opportunity again. But it's about understanding what happened so that you can be prepared for the next one, right? So this is a really good breakdown that I talked about a few minutes ago. I might clip it up as well because I literally did this live for you guys. So we'll see. But we'll come back to gold if we see anything as well, if it does make another touch back down. But AUD, we have that set in stone. Let's go to the next one. AUD JPY. So same concept when it comes to your Australian dollar. All these pairs, they might look similar. So this is kind of looking similar. It's just a little late. It looks more choppy. As you guys can see, there's not a clear range. Like in this one, you can see that's forming a clear range. This one, it's a little bit more choppy, guys, but you also see the same concept, whereas if price does decide to come back, we have all this traffic that needs to be filled eventually and hopefully come back to this nice support level that price respected a few days back, right? Or if we're in the daily time frame, we're in this 30-minute time frame. When was this? This was Wednesday, October 11th. Okay, cool. So yeah, a few days back. But same concept, guys. Same concept. So we'll just go to the next one because I'm not gonna mark up AUD JPY only because I don't think I'm gonna be able to actually trade this pair. But same concept. So on the next one we have CAD JPY. First thing I'm noticing is this is pretty choppy. We're gonna do TDA, starting the daily time frame. Okay, cool. Price is pushing up. Let's work my way down. I clearly see that we have some sort of momentum as well. Price did push down, and it did not respect its previous support. So that's also giving me a red flag low key, because if I were to able to mark this up and I see previously that I did react off of this line in general and it doesn't react off of that line right now, then it's telling me that it's forming different structure that I can't look at from previous price, right? So price is kind of doing its thing. It's not really working with memory, which is completely fine. You'll see this all the time, but as you guys can see, it's doing its own thing off of that new support level. So we kind of have to ignore previous price and look at present price and notice how it is reacting off of that newly formed support level, which is cool. But in this certain scenario, I think what I'd be looking at is where price is reacting off of that newly formed resistance, right? So I can see that price is pushing off right here. We have previous price to confirm that as well. If you wanted to, you could draw this out as a zone since we do have that bullish candle to identify some sort of rejection like this. And it is reacting off of that LPI, which I'm not too crazy about because, again, you don't want to have your stop loss too wide. So ideally, if I did hop in right here, my stop loss would be above that zone and it'd be over 40 pips. I'm not too crazy about that, not gonna lie. But if we had a nice entry that was at that 50% or even 100%, my stop loss would be tighter. So I'm not too crazy about this, honestly. But if you did capitalize on this, that's perfectly fine off of the zone. Not too crazy about. But if we're looking at price right now, it is pushing off of that newly formed support. In this situation, I think I just wait for price to come back. Either respect this range, right? This being range 1, or come back in the range 2. So I'll just keep that marked up as well. I'm not too crazy about it. It does look a little choppy, but we'll come back if needed. And it is currently 7:25. So in the next 5 minutes, I want to try to look for some valid setups. As you guys can see, I'm just going down every pair and breaking them down through the naked eye. And I'm not even halfway. So I think I'm going to try something new tomorrow morning because this takes way too long. But if these are helpful, let me know. Because a lot of people want me to break down pairs just from the naked eye, starting TDA, and I've been doing this for 4 years now. So if you guys want me to just continue doing stuff like this, let me know. But it takes way too long, honestly. So I'll come back to CAD, JPY if I see anything, but this is the most ideal for most people as well when it comes to price action. Identifying the trend, identifying structure, and then identifying a good entry. That's all you need. Euro AUD. Oh, let me get off this tool. Euro AUD. Let's see. Not too crazy about. I do not trade Euro AUD as much as like Euro USD, just because USD is more volatile. But starting TDA, top down analysis, we see that price was pushing down, a little bit choppy. Price is starting to push up. Let's go to the 4-hour. Can we identify any structure? So one tip as well, when you guys do TDA, when I start on my daily time frame, I'm primarily looking at the perspective of the market. Okay, is it pushing up or pushing down? That's it. On my daily time frame, I'm just generally looking if it's pushing up or pushing down. Are we in a bullish trend or are we in a bearish trend? That's it. 4-hour, same thing. I'm working off that perspective, but I'm also trying to find structure. Can I see anything? Like, am I able to identify anything just looking at price? All right, cool. Boom, we have this line. Why did I place this line? Because price is reacting off of it. We have a touch right here, right? We have a touch right here, right? We also have a gap. People were hopping in for sales. Cool. So this is valid already. We have a touch right here. Why is it still valid? Because we have a push in the market. It breaks structure, but then it comes back. And the best terminology for this is a break and retest. Price breaks structure, and then it has a retest. That's literally what it's doing. So because it retests that point in the market that we had previously marked up, this line is now, I don't want to use the word legit. It's now valid. That's a better word. This line that I marked up is now valid. So we can call this a newly formed support. So because we have this, we can say that price is, or there's a high probability that price is going to continue to push up because this line is so efficient. So ideally, you want to see something like this and then go to the next zone or line, this being resistance, right? Let me push this out right here. But yeah, that's simple. So in this scenario, now that I have structure marked up, I'm going to my 2-hour time frame. I'm trying to find, all right, let me delete this. This is confusing. I don't want to draw too much on the screens to the point where it's confusing. But now that I have my structure identified, ideally I want to look for some sort of entry, right? Perspective, structure, entry. And as you guys see, price is pushing down. So we could potentially have a setup for this morning on Euro AUD since it's not too far from that support. We're also in the 2-hour time frame, and we have about 30 minutes, which is cool. 1-hour time frame, just trying to get a grasp to see if this is actually ideal, because usually on your higher time frames, the candlesticks are grouped up together, and then on your lower time frames, they're separated, so you can see what's actually happening in between those candlesticks, right? So right here, I'm not too crazy about this, only because if you guys go look over here, we see a lot of wicks, right? We also have a lot of wicks right here as well. So I want to be very careful. If I do end up having an entry, let's say for a buy, I want to be careful just in case we have a fake out. So in this situation, I probably just wait until we come back down. I would make this tighter like this and see if we can find any good moves for a buy, because we already had that break and retest, right? So price already broke structure. So now we're just trying to see if it's going to stay in this range. So this being 2 and this being 1. Very, very simple. Now, if it does break structure, so if you do have a fake out and let's say it does go past this zone, then I would look for a re-entry at the next pivotal point, which would be right here, right? Or the next, or the, what do you call it? Previous support. Very, very simple. So I'm going to go ahead and mark this up as well and just say look for buys just in case. And also when I'm not live, so I'm going to be doing this every morning, 6 a.m. Well, I started 6:30 to 8 a.m. I might just go for 6 o'clock. But if I place any trades post New York session, what I think I'll do that following morning. So let's say I hop in a trade at 8:05, 5 minutes after I ended the live. I would just have to recap that the following morning and break it down for you guys. So if you're on live, you'll get that information. I'll break down the trade that I might hop into off live so that if you do hop into it, you'll be able to, what's the word? You guys get what I'm saying though. You guys will be able to experience that trade off live so that when I talk about it the next morning, you'll know what I'm talking about. So yeah. But anyways, 66332, and let's just say look for buys. So I think that's the main objective of these live streams, is for you guys to get the information so that when I'm off live, you will have the confidence to hop in those trades that I talked about for the next morning. Cool. Glad I got that out the way. Yeah, look for buys right here, and that is on Euro AUD. So far we already broke down 3 trades that we're looking at. AUD, AUD USD, we know what we're looking for. CAD JPY, we know what we're looking for, and Euro AUD, we know what we're looking for. And I've only been able to knock out 3 pairs, and it's been like an hour already. So as you guys can see, this takes a lot of time, and that's primarily why I do, like, when I have services. A lot of people tried to call me out for it. Like, why do you have services? Because it takes a lot of time for me to teach guys. Like, for me to break stuff down and to play both worlds of me focusing on my own account is a skill, because I'm not focused on myself. This isn't about me. It's about the community. It's about helping people. But I have to find that balance of also putting myself first as well, you know, like making sure I'm good. Because what happens is I'm so focused on explaining stuff, and I might miss a setup. But it's fine, because you're going to see this over and over again. But the reason why it's not really fine right now in this situation is because I'm doing the funding challenge. So I need to make sure I'm locked in, I guess. I don't know. We'll see how I manage this this whole phase though. But it is currently 7:33. We have about 30 minutes before live ends. If you guys have any questions about all the previous pairs that I broke down, please ask away. I'll be more than glad to explain again. There's only like 1 person in here, which is perfectly fine. I didn't imagine people to be on my live streams as I was away for 6 months. But as I start to get more motion, you guys can feel free to ask questions, all that stuff. Euro CAD. On to the next pair. So TDA, again, top-down analysis. Starting the daily time frame, look at the overall perspective of the market. What do we see? Price is pushing down. We have some sort of bearish trend. It is starting to push up just a little bit, but we can't go for that 1 candlestick because it is still in formation. So I'm looking at the previous candlesticks, and we see some sort of bearish momentum. We could also say that this was a fib formation if you wanted to, because we do have that nice pullback before price has a bearish continuation. 4 hour, we're looking for structure. What do we see? All right, so price is starting to push down again. I can already see that price was reacting off of some sort of support. If we mark this up right here, is it the best support? No. We see that it wasn't as accurate right here, and then we have a wick right here. Okay, cool. So ideally, if you have some sort of choppy market, you want to see what's past that. So I'm looking down here. We see that there's a nice pivotal point where you could mark up some sort of zone being demand, since the price is above. And if it's below, it's called supply. But in this scenario, since it's above, this is our demand zone. So if price does decide to come back, we can have a nice entry to have a nice bullish reverse or bearish reversal. If it is it bearish or bullish? If it's coming down here and it's reversing, that's a bearish reversal, right? Yeah. So this is what I'd be looking for. Some sort of reverse in the market. If price is looking choppy, okay, cool. We're not going to focus on a choppy market. We're going to wait till we see clear structure. So the most clear thing that I see is this nice zone that I want price to be attracted to. We also have all this bullish traffic that it needs to be filled. I talked about this 30 minutes ago. When we talk about fillings in the market, if you have some sort of momentum, you have traffic, price is going to be attracted to that. In some form or some time, price is going to make its way over there. And that's how you get gaps in the market. We already talked about this on gold. Why did gold have that push, right? Let's look at the daily time frame. Look at all this bullish traffic, guys. I can't make this up. You don't have any candles back to back. Well, you have this nice bearish candle, which price did react to before it had that monthly low right here. It did react off of that. But to find the bigger moves, you want the bigger gap. So when we talk about gaps in the market, price is going to be attracted to all that traffic that we had previously. So price make it, let me slow down. Sometimes I speak too fast. So price finally made its way back since March, and we had a nice push that was over 1,000 pips. Very, very simple. Same scenario that we see on Euro CAD. So I want price to be attracted to all this momentum, and we're going to try to get that 50% move. We're in the 2-hour time frame, so we won't see this today, but I'm still going to mark it up. You never know. So I'll just say or 2. Actually, let's move this. We'll keep it right here. This is fine. So 1.42, 483, and we'll just say look for buys. Boom. The nice 50%. Why am I keeping it at the 50% and not that HPI? Is because when you have a bigger stop loss, it's more risk, guys. It's very simple. So I want to try to manage my risk and make it at that 50% level just in case price decides to continue to push down. Because ideally, the best scenario is that it hits that 100% level so that my stop loss can be tighter, right? So if price does decide to come down to that LPI, that lowest point of that demand, I'm good to go. My stop loss can be below this zone for about 20, 15 pips. But if we hopped in right here, it's more risk. And it's just how I've been trading for the past 4 years, guys. How I've been trading, how I manage my risk is I try to make it as tight as possible. I know some people, they use a 1-to-1. So in this scenario, if it does hit that service level, a lot of people would use a 1-to-1. It was already up there. Perfect. That's fine. You can trade like that. That's perfectly fine. I'm not bashing people that trade like this. Me personally, what works for me, I wait to have a safer entry so that I know if price does hit that 50% level or that 100% level, my risk can be outside of that zone and I can manage it more. So that's just me personally. That's how I like to trade. But same setup that we have on gold, I'm going to incorporate it on Euro CAD. So we're just waiting for price at that 50% level, and then we look for buys. Very, very simple. So I'm going to mark this up blue, meaning we probably won't see that this morning, but we'll see it sometime later this month. We'll come back to it and talk about it. Same thing on gold, guys. Or same concept, right? When it comes to gaps in the market, traffic, and understanding liquidity, trying to find that best pivotal point to enter in. You want to wait and be patient. So we already broke down gold. We broke down the AUD, USD. We know what we're looking at for these type of setups right here on the 30-minute as well. We could get this move this morning. We have about 20 minutes. Again, if you guys understand the setups, you can enter in when I'm off live, and then I'll talk about it the next morning. But if I'm off live, if you guys didn't ask any questions, that is on you, 100%. CAD, JPY, we talked about what we're looking at for this pair as well. I'm gonna mark this up blue because I don't think we're gonna get this. We're gonna get this set up this morning. We might have to wait throughout the week. So this is gonna be blue for now. Euro AUD. Could we get this move this morning? We could. So that's gonna stay green, guys. I already went over what I'm looking at on this pair as well. Euro CAD we just went over, and then we have all these other pairs that I have not gotten to, which is perfectly fine. But if there's a pair you guys want me to focus on, let me know as well. Me primarily, I'm only going to focus on gold when I'm doing these lives, only because there's too many to go through and it takes like 30 minutes for me to break down each pair. So y'all just let me know. I think I'm gonna skip Euro CHF. Like I said, guys, I'm not a fan of CHF. I don't really trade that pair. That's Switzerland. I don't think a lot of people do in general. It's not the most volatile pair or currency. So for now, we're just gonna skip this. Even just looking at the pair, I don't really see anything. I mean, price is doing its thing. It does have this this all-time low, or this is a yearly low. Like this is September 22nd. So this is a yearly low that price made its way back to. And I'm kind of contradicting myself because although I was talking about how gaps are super important, and you want to look for gaps, I just don't trade CHF. Am I a hypocrite for that? I might be. And also, this is wicking down. Like, this isn't as accurate because, you know, we have this bullish wick right here. So we don't really know where price is going to end up stopping. This is a current candle as well. We're on the daily time frame, so this could flip bearish. If we go and scale down on the 4-hour, we do see that it is pushing up. So, I don't know. For now, I'm just going to stay away from it. I don't know. I'm not too crazy about this pair, guys. But, yeah, let's move on. I'll just keep this marked up. Let's go back to the daily time frame. I'll just have it marked up. Why not? Euro GBP. All right, so first things first, I've been talking way too much. Let's go ahead and check our news just to see if there's anything that came out while I was yapping for an hour. Euro USD forecast stays below cluster resistance. So I think it's the same thing. GBP eases near 12,150. GBU's pairing back gains to near 12,150 in the European session on Monday. The pair is weighed down by the latest dovish. Okay, so I think this is the same stuff that we looked at 6 o'clock, at 6:30. And then we are still looking at this for a post stream. And again, guys, my Discord is dead. Like, I'm not coming back on Instagram or Discord until I complete this 2-month period. Just because I'd rather come back. How do I put this in the words? Instagram, social media is like a false reality for me. And it doesn't allow me to focus on what really needs to be done off camera. So I think I'll come back to all that stuff once I have a lot of motion, honestly. So this is my first live stream being back after 6 months. There's a lot of catching up to do. I've been doing a lot off camera, guys, that I want to tell you guys about. But I'd rather just tell you guys about all that stuff once I actually complete this stuff. You know what I'm saying? Like, there's no point for me to be back on Instagram right now unless I've actually completed what I said I wanted to do. So we'll wait for like a month. But Discord is dead, so I don't know where I would send these. The only place I would send them, not trying to market my service, is on the bot where people are actually paying for something, because you're paying for a service. That's only right for me to post stuff. But in terms of a free community, I don't know if I should post these on Discord because truthfully my Discord is dead. So for now, like I mentioned, I'll give you guys the information so that when I'm off stream, if you guys hop in the trade, we can talk about it the next morning. But for now, everything's just going to be live. But 8:30, I'm going to be on the charts, guys. So if I see something, we'll just have to talk about it next morning, honestly. So USD Empire State Manufacturing Index. Cool. There we are. Euro GBP. So let's do top-down analysis real quick. Market's already looking choppy. So again, daily time frame, you're looking for the perspective. You're not looking for setups on the daily time frame unless you're swing trading, guys. All right? Unless you're swing trading, you're looking for really big moves to hold throughout a week or even month. Cool. Trade on the daily time frame. But when you're talking strictly top-down analysis, you're starting for your time frame, your higher time frames, and you're working your way down to analyze the market. Top-down analysis. So in this scenario, or for this pair, starting on my daily time frame, I'm looking at the overall perspective. Is price pushing up or pushing down? Bottom line, is it moving up, moving down? Are we bullish or bearish? So for Euro GBP, sorry guys, I see that price is starting to push up just a little bit, and it's forming a lot of wicks, right? And that's kind of a red flag for me, because when we talk about clear ranges or clear markets, if it's ranging, if it's bullish or bearish, this isn't even telling me if it's in a clear trend or if it's in a range. As you guys can see, this is not a range because price is going in and out. Like if I was trying to put this to a range like this and like this, it would look really choppy, right? Price, it does hit this support, does a resistance, then it kind of fakes out, comes back in, fakes out again, doesn't even hit this support, fakes out again. We have a wick, it does make another touch, but it's really choppy. So when you guys have a choppy market, just stay away from price. And that's how you can save time, because you start on your daily time frame and you identify what type of market you're in. So because I was able to identify the market, I don't have to waste any more time in this pair, right? I'm done. I'm not going to look at it. I'm not going to try to force myself to see something if we're in a choppy market. Hopefully that makes sense. And that's why top-down analysis is so important, because you're analyzing what price is overall doing to see if it's even valid in the first place. All right, so we're not going to look at Euro GBP for this morning. And I do apologize, guys. We have 15 minutes. I'm doing my best to go through all these pairs for you guys. Euro JPY. Again, top-down analysis, we see that price is consolidating. So what is consolidation? Consolidation is where you see price going in and out, and price doesn't know where it wants to go, right? It's stagnant. As you guys can see, we have these small moves in the market. And again, we're on the daily time frame. So we're seeing all this small movement. You can imagine what it looks like on the smaller time frames. It's very choppy. It's consolidating. Prices next to each other. You don't see a clear uptrend or a downtrend. It's consolidating. Price doesn't know where it wants to go yet, right? Let's just work our way down. 4 hour. As you guys see, price still doesn't know where it wants to go. We can just highlight this, honestly. Let's just highlight this whole area, so you guys see exactly what I'm talking about. I don't like that. I think blocks would be better. Yeah. 10 times better. But price is consolidating. What's the difference between consolidation and a range? Isn't it the same thing? No. Consolidation is where price doesn't know where it wants to go, and you clearly see that it's stagnant, it's going in and out, and there's not a nice structure to it. Whereas a range, it's very clear. You have price going in and out. We have gaps as well that people can actually trade off of. Because when we see gaps in the market, people are buying and selling, right? This right here is very choppy. So if I was trying to form this into a range, I'll show you guys in a second. Let me delete this. If I was trying to say this was a range and I was forcing myself to, like, you know, mark it up, it just wouldn't be as ideal, because price is going in and out so many times, and it's kind of what's the word? It's kind of stagnant to the point where you don't really, it becomes unpredictable. That's the word. It becomes an unpredictable market. Whereas a range, it's much more clear, in my opinion. So some might say this is a range. You could say this is a range, but me personally, I'm gonna stick to my information that I've been able to receive. I think this is considered consolidation on the higher time frame as well. Scaling down, you could try to form it into a range if you wanted to, and say it's a ranging market and you're trying to see if price is going to break to the upside or downside. You could in the lower time frames, but me starting out on the daily time frame, me seeing all this right here, it's consolidating. Price doesn't know where it wants to go right now. So I will just mark this up. I'll just mark it up green, because we might come back to this later in the week and so we can see anything. All right, Euro USD. So price is pushing down. We do have a gap. Price did not respect. Let's go down the 4 hour time frame. So price is pushing down. Let's go on the 2 hour. All right, so same concept that I used on, I believe, AUD USD. Yeah, okay, same concept that I use on AUD USD. So for Euro USD, I'm gonna do the same thing. I'm simply gonna wait for price to come back into that range and fill all these orders. So I have my marker right here. And yes, I could try to look for sells, but the thing is, guys, price has already made that pullback entry. So because we missed this entry right here for a pullback, right? And this being our resistance, price pushing down, it's starting to push up. It already broke structure for a continuation. So when we talk about trends, right? Price makes a dip and comes up for a bullish. Price makes a dip, comes up, and then comes down for a bearish, right? That is the overall structure for a trend. Everyone knows this. This is universal. Bullish trend goes up, goes down, goes up more. Bearish trend goes down, goes up, goes down more. But when it breaks structure, these trends are not valid anymore. What do I mean? So we have structure, right? Right here, and we have structure right here. Or I can actually just draw this out, because this is actually parallel. So let's just extend this.
Yeah, let me delete this one and just extend this line because this is actually pretty parallel. So we have structure, right, for a bearish trend, and we have structure for a bearish trend. Very, very simple. But when you break structure, so again, we have structure right here as well, because that little pullback is forming some sort of zone that a lot of traders are going to mark up for a future entry. So when you have these zones marked up and you form some sort of structure, keep in mind that when structure is broken, it's no longer identified as a trend or a continuation. So let's say price does come back up, right? If it respects that newly formed resistance and pulls down, it's a bearish continuation. Same thing with a bullish trend. Guys, if it comes up, comes down, you can also classify this as a break and retest and pushes back up. This is known as a bullish continuation. But what people don't really talk about is when it breaks structure, right? It is no longer some sort of continuation. You got to look for another type of setup, all right? So in this scenario, we can clearly see that price is pushing down. Cool. We can say that this is a bearish trend. But as you guys can see, this would have been our newly formed structure. We also have a gap to confirm that this is a identical, this is a, how do I put in the words? This is a confirmation, okay? Confirmation that this is a valid pivotal point for support or resistance, depending on where price is at. But since we have this point, right, that price is reacting off of, and then it has another push, and then we're coming back up for a continuation, it broke structure at this point, which means this is no longer valid for a bearish continuation. So I'm no longer looking for sells, right? So I'm using the same method I used on AUD USD. I'm looking for that break to come back into that first range. So we can say this is range 1. We can just say this is range 2. Okay, we're going to delete this line so we don't have to split up more areas. Let's just go here. Let's just go range 1, range 2. Okay. And simply wait for price to come back up and then enter in for a nice buy, because you have to remember people are also swinging in the market. So people are also selling right here. People are also going to sell once we hit that mark at 105.90. So we can just say right here as well, just thinking about the future. And I will look for buys, okay? So that we can have that nice traffic fill so that orders can also be grabbed from the flip side. So I'm going to go ahead and just put a nice alert and say look for buys. And I doubt we're going to get any moves. We have 8 minutes, guys. So what I'll do is if I see any setups, especially at 8:30, I will enter in for my challenge, and then we'll talk about it the next morning. I'll just say look for buys. What? Oh, okay, cool. All right, cool. Let's go ahead and highlight this as well so you guys see exactly what I'm talking about. Let's make this bigger. 1. Or we'll just draw it again, honestly. It's pretty sloppy. There we go. All right. So hopefully that makes sense. Hopefully that makes sense. But we have about 7 more minutes. I'm just going to go ahead and mark this up, but then I think I'm just going to look for areas to enter in before I end the live, honestly. We'll go ahead and mark this up. Blue. Let me just briefly go through all these before I end this live to see if I have any setups that I want to enter in on. So this just happened. We would have had a nice entry right here. It's a nice break and retest as well. Price breaking structure of that double top being right here. And then it comes back. And then this is okay. So I'll go ahead and mark this orange because I want to talk about this tomorrow morning. This is a nice setup that you guys will see over and over again. I did miss this move. This happened literally as I was speaking. Point being made, guys, as I'm explaining this, I'm going to start missing entries. So I'm going to have to start finding a way to balance all this at once. But yeah, definitely just missed this. It might come back, so we'll just mark it orange for now because this is AUD. So we might just have to come back to that. British pound, Japanese yen, looking choppy. We're going to ignore that. British pound, New Zealand dollar. So this is GBP NZD. I'm not a huge fan of NZD, but we can go ahead and just look at the daily time frame. All right, so price is trying to push up. 1 hour time frame. Let's go in the 2 hour. Okay, we're gonna skip that for now. GU. All right, cool. So this is on FX Street as well. So GU, I'm not really seeing too much. I'm just quickly going over these guys 'cause I have 5 minutes before I end this live. I'm trying to give you guys or find a setup before I end this live. We'll just come back to this. Let me mark this green. USD, CAD, and not seeing anything here. Okay. So let's just go back to our trades real quick. We have 5 minutes and talk about if I have any setups that I might enter in on. So gold pullback entry was already activated. I talked about how you'll see this setup over and over again. Again, we're just simply waiting to see what gold does off of that push that we had last week. AUD, USD, again, we're just waiting for price to hit that point. So I'm probably going to enter in on AUD this morning on a nice buy. So it would look something like this. Is this USD? Yeah, this is USD as well. So we have news literally 30 minutes. So we might see a push in the market, truthfully. So I'm definitely going to come back to this. Looking for buys here, guys. So next 30 minutes, if you're trying to look for moves, I will look for a buy on AUD, USD, and I'll have that marked up for next morning. So I'm going to go ahead and highlight this. Let's highlight this blue, honestly, and the rest can be green. AUD, JPY, nope. CAD, JPY. Do we know what we're looking for on here? Yes, we do, but that's not going to happen for some time. We're going to mark it orange. Euro, AUD. Do we know what we're looking for? Yes, we do. We could get this morning, so this is going to say we're going to mark this blue. Euro, CAD. Move's not going to happen for some time. Mark it orange. Euro, JPY. No, we're just seeing what's happening. Okay, cool. Let's go to market orange. Euro, USD. Could we get a move this morning? USD, yes, we could. So I'm going to mark this blue. And pretty sure that's it, right? And then GBP USD. We're going to keep this. We're going to keep this red. So my color codes, I'm sorry guys, for you guys watching post stream, my color codes. Green means I'm looking at a trade. What does green mean? I'm sorry. Oh, green means I'm reviewing something, right? I'm reviewing a trade that happened. Blue means I'm looking for a setup that morning, this morning being in particular. Red means nothing's happening. Orange, I'm looking at this trade later throughout the week. So orange are trades I'm looking at later for post streams. And blue is for current streams, okay? And pink is just extra. So pink is just crypto. But yeah, I'm going to go ahead and wrap up in the next 3 minutes. Hopefully this was helpful, guys. Again, I'm going to be doing this every day, Monday, Thursday. So hopefully this was helpful. I'm going to try to find a new method to make sure I'm not missing out on any setups while I'm doing this. And yeah, feel free to ask any questions. Again, I'm not going to be active in the Discord for at least another month or Instagram. The only time I am going to be on Instagram is when I'm posting clips. I'm going to start being on TikTok again so that I can go live on TikTok. But until I start having more motion, guys, I'm not coming back, straight up. There's no point for me to come back online unless I say the things or do the things that need to get done first, okay? Honestly, what I think I'll do is put this bad boy up here. So we're just gonna adjust this just because I noticed that we had this nice bearish candle to identify some sort of zone that price may have been reacting off of this whole time, right? So boom. So we're simply gonna wait for that nice breakout and enter in. Let's see, Euro USD. Let's go on the 50-minute, just make sure we don't see anything. Okay, 30-minute. If price does react off of this, that's cool, but if it doesn't, if it breaks structure, we're looking for a nice entry back into range 1. And then Euro USD, we're going to look for that nice breakout entry into range 1. Very, very simple. go ahead and move this up here. So we have 3 setups this morning, all right? We have 3 really good setups this morning. We have about 30 seconds. Alrighty, and that's gonna be this morning's stream. Let me know if you guys think I should go longer as well. So far, my schedule is 6:30 to 8, so I go for an hour and a half. If I need to start at 8, if I need to start at 6, and end at like 9 o'clock, I can. But you guys have to remember, I am still a college student, unfortunately. So I have class in the morning, but I will make those sacrifices if I have to. So for now, it is around 6 to 8. My schedule being I start at 6, I end at 8 o'clock. But if I need to go longer, since we do have news at 8:30 for you guys, I will. But you guys can just watch the stream over. I explained all the pairs that I'm looking at. I explained all the pairs that I'm looking at this morning specifically. Blue means present. Orange means post. Red means irrelevant. And green means breakdown. When I have all these marked up, those are my color codes. But yeah, reminder, we have news at 8:30. It is on USD, so make sure you guys be prepared. If you guys are thinking about hopping in any of the trades that I broke down, please watch these breakdowns again for more confidence that when we talk about it the next morning, you'll know what I'm talking about, okay? But yeah, that's going to wrap it up for now. Thank you for joining the live stream if you did. Shout out to you guys that came in and came out. If you are watching this after the stream, shout out to you as well. And make sure you guys trade with risk, proper risk management. Until next time, guys, I'll see you guys in the next one. Take care. Have a good morning. And I'm out.